The long-term care insurance industry continues to suffer through hard times. Underpricing in yesteryears has led to profitability issues today, and large insurance companies have lined up to exit the markets. Is there a solid future for LTC coverage? With us to talk about the long-term care industry is George Hansen, Senior Industry Research Analyst, and Bruno Caron, Financial Analyst. And Bruno, long-term care results have been poor for quite some time, mostly due to pricing. How is long-term care different than other types of life annuity products?
Well, long-term care is different on many fronts in comparison to life insurance and annuity products. First, the abundance of assumptions that are required to price and reserve for long-term care is very high, and that contrasts with life and annuity typical products. The interdependencies between those assumptions is also a differentiating factors. And lastly, by definition, long-term care is a long-term product, and that definitely exacerbates these issues. So the combining effect of all those factors result in a very risky offering from a carrier's perspective.
Now, you mentioned the abundance of assumptions. Can you talk to us a little bit more about that and how that's evolved?
Sure. I mean, when we think about life insurance products are usually driven by mortality rates as well as interest rates. In terms of long-term care, those two assumptions are predominant, are very important. But there's a significant number of other assumptions that are also important, such as inflation rates, claim termination rate, benefit utilization rates, and the list goes on. So again, that did translate into a very risky offering from a carrier's perspective. And if we look at from a consumer's perspective, it's a somewhat different offering. Typical insurance is usually set up in a way that frequency is low and severity is high, and that's the case for auto insurance, home insurance, life insurance, and the consumer pays a small premium and expects a large benefit if an unlikely event happens. Long-term care is a little different in that regards, where it's more of a medium frequency and medium severity event, and that has caused some discrepancies.
Now, George, the number of long-term care policies has dropped off dramatically. However, premiums have pretty much remained the same year over year. Can you explain what's going on there?
Yeah, there are three factors that are keeping premium levels fairly stable. The first is that most companies writing long-term care business have applied for rate increases, maybe multiple rate increases on their existing business. State insurance regulators have allowed for these increases, maybe not to the extent that the companies applied for, but nonetheless, the rate increases have been keeping premiums at their current level. A second factor is that the companies that have repriced new products, the premium rates on new business can be significantly higher than what was on the older block of business. In some cases, 2 to 3 times higher than the in-force business they had on their books. And then the last reason for the premium levels is lapse rates have been very low on this product. Policyholders are not lapsing these products. They're willing to keep these products at these higher rates.
Given the life cycle nature of long-term care, could we be seeing more bad news ahead?
Yeah, the likelihood of further reserve increases exists because of the fact that state regulators may not be approving the entire rate increase the companies file for. And what this means is that their loss ratios will continue to grow. They will not be able to sustain the price for loss ratios, and therefore a premium deficiency condition exists. So there's a lot of applications for rate increases that did not get the full rate that was requested by the companies. Another factor is that companies vary in the due diligence when reviewing their in-force blocks. And because experience is still emerging at this point, given that long-term care is a fairly young product, there's always a potential for companies to find emerging experience that they weren't expecting.
Bruno, is there a silver lining in this cloud? Is there a profitable path ahead for long-term care writers?
We do believe so in the very, very long run. But as George mentioned, long-term care is a fairly new offering. It's been offered for a few decades only. In the insurance world, that's relatively new. If we compare that to life insurance, it's been offered for many, many centuries. So we do believe there is still going to be a demand as cognitive and dementia-related diseases remain a financial threat for individuals. It's a loss that is random in nature, which makes long-term care an ideal candidate for insurance. Awareness is present in society, and as George mentioned, from a more technical perspective, pricing hurdles have gone up. Industry data is slowly making its way through the carriers' knowledge and the industry knowledge. So slowly but surely, we're starting to see more grounds to make better informed decisions. But with a caveat that this will be a very, very long process, and in the very long run, we do believe that the industry will overcome these issues.
Yeah, one thing I'd like to add to that is there's been talk in the capital markets of various solutions that could be offered to existing long-term care blocks that would alleviate some of the risks, the interest rate risk, the mortality, morbidity risk, in the form of some kind of swap. However, there's been very little activity to date with such transactions, but those could possibly alleviate some of the risks in the long-term care market. And the last thing I'll say is that the product is, may undergo a change if approved by regulators, in that the premium structure would be more of an annual premium that's reset more frequently than on a level basis. And this would give companies more flexibility in the way, not having to go through the rate increase process. Now, whether the consumers will go for that kind of flexibility remains to be seen.
Thanks, George. Thanks, Bruno.
Thank you.
You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.